Welcome back. Markets slipped a little bit from the highs of the day, but that's par for the course, one would say, after the kind of rally that we saw in Wednesday's trading session. But as promised, we have the management of CMS Info Systems. Rajiv Kaul joins us in the studio. Thanks, Rajiv, for coming down. Well, we've got a few points to discuss, so let's first highlight that. FY26 outlook remains a little bit tepid. What's the outlook from there on? The margin guidance, and what about that cash in the books? Is there some inorganic growth opportunities? Well, Rajiv, kudos to you all actually, because you all have seen some softness in the first half of the year. So in that sense, shareholders are not going to get that, surprise all of a sudden, the negative surprise. Explains why I think the stock as well is closer to a 52-week low. That said, you've called out that things should look up from here on. And one of the points is you're seeing the total number of outsourced ATMs at around 120,000. You're expecting it to go to around 135,000 by the end of this year itself. So a couple of points. When does this tender open? And out of the incremental ATMs, outsourced ATMs, how many can you garner?
Sure. There's so many questions. One question out there. So H1 has been softer. I think for us as a management team, we wanted to be upfront about and share as we see the markets and call it. I do think our opportunity in the next short term, mid term, long term is still very solid. The rollout of these remaining 15,000 ATMs already happening as we speak. So they're not linked to any tender or whatever. And I think this will go up to 145,000 in FY27. Okay. So I think the ATM rollout outlook is fairly good. They have shrunk temporarily, which has affected growth for us. But I do want to say that this affects 60% of our revenue, which is our oldest business. 40% of business is different, around consumption, around technology and digitization.
Yeah. So, but how much of this incremental ATMs, the outsourced ATMs, what is normally your hit ratio?
So our current market share is 57%. 3-4 years ago, this was about 45. So I think I would hope that we take to 57 and maybe higher.
60%, but let's talk about the other 40% of your business, which is, been growing at a fair clip, and you've been wanting for that to increase in the contribution itself. Right. That's the IoT part.
Right.
Let's talk about that. And in that Vision AI, I remember the last time you joined us, you said that, it's about 7% of your sales. You're aiming to take it to double digits. So where are you on that journey?
Okay.
And your touch points there were what, 25,000, and you were going to go to 50,000. Where are you on that currently?
So, great questions. I think our technology business, which was roughly 5% revenue about 2 years ago, is already at 10%.
Got it.
At 10%
Vision AI.
It's Vision AI mostly. It's also do the software work we do for banks.
Got it.
So we have also resegmented our business, Mangalam, from a perspective of simplicity, also thinking about the broad macro themes. The themes we want to play on is outsourcing, which is what we've been very strong in, consumption and formalization linked to GST reforms, and third is technology and digitization. So in technology, we do Vision AI. We also are looking to see what we can do in broader payments. I think that business should contribute now 15% revenue by FY27. So that business from 0 to 5 to 10 to 15, we're talking about FY21 to 27. That ramp up is what we are seeing.
Got that.
Vision AI, we started from almost 0. We are now at 30,000 sites already. We should be 45,000 sites by the end of March, this year itself. So that's a quasi-SaaS business, and that's why we've been able to scale it so well. Within the BFSI segment, we've taken market share from 4% to 25%. And hopefully by the end of the year, it'll be about 30-32%. So rapidly growing business, large TAM, but I do always like to say that, these are businesses which are fiercely competitive. And therefore, being out there, investing with technology and being ahead of others is really important.
Well, I think the industry has slowed down a little bit, which is reflecting in your first half of the year performance. But as you're saying, your market share is rock solid, and you're looking to build onto that as well. So let's talk a little bit about pricing. When do you see improvement, and what are the levels that you have in store? I ask you this because your realization per ATM, I think it was around 7,000 odd 4-5 years ago. That's moved to around 11,500 odd. Even if I look at your BLA transaction, out there, I think it was, 11 per transaction or thereabouts. That's moved, I think, to around 18. When do you see pricing improvement? Because you're going to be gaining market share, you're focusing on volumes, but pricing at some point of time as well, you'll have to go ahead and, take the plunge.
So if I think of the last 4 years, let me talk data. And, Mangalam, your earlier question, the fact that our other businesses are growing rapidly, despite our ATM solutions business, which has doubled in the last 4 years. So it still continues to grow very rock solid, like almost 15-17% growth. Will slow down a little bit, but still will be double-digit growth. I think a market like India, which is fiercely price competitive, we are a market leader. Frankly, we want to be very aggressive on pricing, right? Because there is, I think prices have grown well, and that's why the growth has come up. But in our interest, I would say that if prices remain competitive and we innovate with our delivery models, operating models, keep our high margin profile intact, I think that's great for a market share gain.
Okay, 2 numbers then. Your business definitely is evolving, and you've moved away from your core business. You're trying to innovate as well. What is the margin guidance we should look at? And ROC, that has been rock solid, 20-25% for a company that I think is trading at around 10 times core business.
Right.
What is the outlook on both these two, margins and ROCE?
Margins, you guys know me very well, right? We never forecast margins. I think we've delivered very strong margin profiles, 14 to 16%.
But ROCE is something that you
ROCE we care about a lot, right? Because I tell people that we are a high growth company. We have grown 16% over the last 16 years. We've grown 17% over the last 4 years.
Got it.
And our ROCs in the last 5 years have been about 24%. So for us, if we can keep ROCs about 20% levels, which is our clear North Star, and keep growing revenue at 12 to 14%, I think that makes a very compelling mix.
All right, we take that point. Final question before we let you go. You've come down to our studios. You've given us an FY30 revenue guidance of close to 38 to 3,900 crores. Outlook. Let's call it an outlook for, you call it an outlook, we call it guidance. 3,750 to 3,950 on an organic basis. If you add the inorganic business, it's close to 4,500 to 4,750 crores. So you are obviously looking for a company that gives you 300 to 350 crores revenue right now for it to scale up to 700 crores by the end of FY30. You have 1,000 crores of cash on your books. How much are you willing to deploy? When do we hear? And what company are you buying?
So, one of the compliments we get, and I'm happy to share it, is that as a team, we've done reasonably well on capital allocation, which means we've been lucky with allocating capital at the right time. We have mostly depended on CapEx for growth for the last 4 to 5 years and given dividends for the last 7 years. In fact, we up dividends when we think we don't have need for capital. Our FCF has been close to 47% of our EBITDA. Out of the 1,000 crores cash on books, we'll obviously accrue more cash for it. I would say that we'll have to have a healthy mix between capex for growth, roughly 200 crores a year, dividends, keep the dividend track record very steady and strong, and deploy the rest for growth. Because if I was a shareholder, which I am,
how much are you on an average giving out in terms of dividend every year?
So I think we've sort of 20 to 40% is off the pat. Is how we timed it up. But as a shareholder also, I mean, I would love to continue investing if we can keep growing at double digits and about a 20% ROC. I think that's the best use of our capital. I think M&A will be a very core part of our growth strategy, looking at how the opportunities are emerging out here. And, it could be 300 crore company or it could be 700 crore company right now. Who knows, right? So we're working very diligently on acquisition targets. My priority on acquisition is to think about diversification, right? Because in the tech segment, I think we have enough opportunities to grow that business line fast. Next would be consumption-oriented, right? How do you get into Suru? Because Suru has a very strong demand out there. And finally, if the consolidation comes in our core businesses, we'll be very happy to look at it.
So we hear something about this in this fiscal year itself?
We're working really hard, relentlessly hard. I hope we have something to talk about sooner than later.
And we'll re-invite you on the channel at that point of time. Thanks a lot, Rajiv. It's been tough times in the first half of the year. You're optimistic about business going ahead. And rough estimates, if you're doing a 15% PAT margin, then hopefully you'll be in that 550 to 600 crores odd. Valuations are cheap, but we'll have to see growth coming back. Thanks a lot for joining.
Thank you so much.